Okay, good evening, viewers. This is your tutor, CPA Charles Coffin, and I'm going to take you through the different types of costs. And when we know those costs, in the end, they will help us prepare a cost statement. It's going to be a short and brief video, but the emphasis is about how to prepare a cost statement. That's where I want to emphasize more on, because it's the basis of whatever we are going to be discussing regarding costs. Because you find when you're doing job costing, process costing, all we are trying to look at is how to determine the cost. But before I take you to the job cost statement or the cost statement, allow me first take you through the types of costs. I know some of these costs we saw them when we are handling the cost classifications, but let me try to go ahead and explain them in details. So the first one, the first category of costs is product cost and the periodic costs. I'm giving them in two ways because some of these costs, they are related, and it will be easy for you guys to understand and pick the information. Because when you talk about the product costs and the periodic costs, they look a bit, one is the opposite of the other. So you will be able to understand these costs very easily. So, as I said, the product costs and the periodic costs. Let me first talk about the product costs. Those are the inventory costs or the stock costs. These are costs that are incurred to acquire or manufacture a product. These are the production costs or production or manufacturing costs. These are the ones that are directly involved in the manufacture of a product. They don't appear on the statement of profit or loss until the product for which they are incurred is sold, and when the product is sold, these costs are transferred to the cost of goods sold account and relate to the product manufactured. So these costs, these product costs, for them, they don't appear in the income statement. Reason is that when we are transferring the cost of the goods we have produced, we are only transferring the when we have made a sale. Like if you sell the goods, then it's our responsibility to determine how much was incurred in the production of those units that are sold. So they only appear there as in they come in the production cost. Since the company is not dealing in purchases, because when you're determining the cost of sales, it is the opening stock plus purchases minus closing stock. But in this time, we are not buying goods from suppliers. We are making our own goods. So instead of adding the net purchases, here we are going to be adding, we are going to be adding the production cost because we produced our own goods. So that's where we report those production costs. And I hope you guys have got it clearly. Allow me go to the periodic costs. You said periodic costs. These are costs. These are costs which are not included in the product cost, or they are not incurred in the production, or they are not part of the goods produced, or they are not incurred in the production of the goods and services. These costs are not included in the product costs or manufacturing process, and they are usually treated as expenses for the period in which they are incurred. These periodic costs, those are the non-production costs which we consider as our periodic costs. We treat them as periodic costs or operating expenses, and we deduct from the figure of gross profit, the gross profit to get the net profit. But we don't include them when you are valuing the value, when you are trying to look for the value of stock or the goods produced. And that's the difference. The other one, they are treated as a product cost. These ones are treated as a normal operating costs, which are supposed to be deducted from the income statement. The second type of cost, we have the variable and the fixed costs. Fixed costs, these are costs which do not vary with the changes in the volume of activity in the short run. That one I explained it, and I will add something that whenever you are giving a definition for fixed costs, you go ahead and add either in the short run or within a relevant range. Those two words must appear on your definition. If you want to find out more, you can just go back to the previous videos, then you'll try to understand how and why we are supposed to add those words. Then the second one is variable cost. These are costs elements which tend to directly vary with the volume of activity. Directly vary or which are proportional to the volume of activity. They can be in form of variable direct costs that can be directly identified with a specific product. When you talk about the variable direct tax, we mean the direct material, direct labor, and direct expenses. And direct in and variable indirect tax costs that supports the production process and not easily identified with the product or the cost unit. These are the indirect material, indirect expenses, indirect labor. They are just supporting costs to the final costs. The third type of cost, we have the relevant costs and irrelevant costs. Relevant costs, these are costs which are permitted for a specific purpose or situation. They differ between the two alternatives and they are crucial in decision making. I hope even that one I explained it. You can check my previous video and try to get more clarity about it. The irrelevant costs, these represent costs that do not differ between possible alternative under consideration and are common to all alternative under review of the decision makers. These irrelevant costs, when you are comparing, let's say, an investment. You are appraising an investment. These irrelevant costs, those are the costs which are similar, that in this business idea they are there, that even in the other business idea they are there. So they don't differ from a certain product and the other. So whenever when you're making a decision, you find those costs which are similar, they are incurred in this side and even the other side they are there. Those are the irrelevant costs. But the relevant costs, those are the costs which comes as a difference in the business ideas we are appraising. You may find that certain items, they have different costs which we incur, and the other one they don't have. So those ones become a basis for the decision making, so that you compare those costs between those items and you see which one has more costs than the other, so that you can make a decision on whether to take the investment or to leave it. The other type of cost we can talk about the avoidable costs and the unavoidable costs. Avoidable costs are those which under given conditions of performance efficiently should not have been incurred. These are the costs which you can avoid if necessary precautions or measures have been taken. They are not expected and not provided for under normal working conditions. Those costs which you can easily ignore and you don't incur them. So they are the opposite of the avoidable. Those are the unavoidable costs. These are the costs which are inescapable and expected to incur within the limits. These are like the normal costs that even if you are doing whichever kind of business, you have to take into consideration that these costs may happen. But the other unavoidable, for them, we don't even take into account because it is very easy to ignore them. It's like when you're handling, when let's say you are buying material from a certain supplier, you may find that there are certain costs which can be avoided from there, so that you make the goods to be a bit cheap. But there are other ones which you cannot avoid. Like if you buy goods in bulk, you are expected to incur transport costs. So those are some of the avoidable costs. And allow me proceed to the next type of cost, which is controllable and non-controllable costs. Controllable costs, these are costs which are subjected to direct control at some level of managerial supervision. These costs, they can be controlled. It's like when someone, let's say labor inefficiency, to the extent that when you're not supervising workers, you may find whatever they are producing, they produce at their own pace. But when you are there and the level of supervision is a bit high, you can control some wastages, the idle time and other costs, which we will incur when we are not supervising them. Opposite to that is the non-controllable costs. These are the costs which are not subjected to control at any level of managerial supervision. We have the fixed costs. Those ones we don't have any control about them. So we just have to settle them because we can't decide or we can't ignore them. Allow me go to the next one, and the next one is job and processing costs. First of all, when you want to understand these costs, the job and the process. For the job, a job is an activity that is done based on the customer's specifications. The customer comes with a different idea of whatever they want. Then it's you to try to make a job cost, whereby you start to analyze what are the costs that are going to be incurred in delivering whatever the customer wants to buy. So to the extent that when the customer comes with his or her specifications, you just employ whatever is there to make sure you deliver the customer's order. Meaning, when you are dealing with a job, it's a specific item and you do it as per the customer's requirement. So when you are determining it, for example, you can talk about in the carpentry workshops, you may find that a certain client comes with an order for, let's say, chairs, and the other one comes with an order for bed sheets, for beds, and the other one may come with an order for tables. The knowledge we use and other costs we incur in preparing those items that the client need, they are different, whereby they even need different people to work on them, because the skills that are needed to produce a table, they are different from those that are needed to produce, let's say, a bed or a chair. They're a bit different. But with the process cost, we are dealing with only one item, and that item goes through a series of different stages before it becomes into a final product, whereby the output of a certain process becomes the input of the other process until it comes out as a fixed commodity. But with the process costs, for them, we consider a similar product. The client may come with a demand less of 10,000 units, but we just know that we will use the same output for another client. That's the difference. Job costs, they are related to those costs incurred in producing a product or a services that is unique in nature and provided to meet the customer specifications. It's the customer who comes with whatever he or she wants. Then your role is to determine how much are we going to spend on the different items that are needed to manufacture that item. Process costs, that one is done, relates to costs that are accumulated to every department or production units for a lengthy production run involving products that are indistinguishable from each other. The other one, we can talk about the budgeted and the standard costs. Budgeted costs, This is an expense that has been planned. This is an expense that has been planned before in advance, for which funds are typically put aside by the business to cover a given activity or to provide a service. These costs, you plan or you forecast them, and you put them aside to cater for whatever activity you are going to perform. Then the standard costs, this is the predetermined cost, which reflects in advance what each product or service should cost under given circumstances. Then I can proceed to the next one, which is the historical and predetermined costs. Remember, we talked about these costs when you are handling classification, cost classification. Like for these historical costs and predetermined costs, we say those are classification by time or on the basis of time. That these historical costs, those are future costs. I mean, they are costs which were incurred long time, but these predetermined costs, those are future costs. Historical costs are actual costs of acquiring assets or producing goods or services, and they follow the system of accounting. Those historical costs, those are the costs we use when you are doing financial accounting. But these predetermined, they are computed in advance of a production process on the basis of specification of all the factors affecting cost and cost data. So you can allow me go to the future costs and conventional costs. Future costs, these are costs. Are those costs expired or planned to be incurred in the forthcoming period? They normally form the basis for budget and used in making decisions that influence future directions of the company. These are costs which we plan in order to see the future, in order to make decision on the future directions of the company. Then the other one, we have the conversional costs. The conversional costs or the conversion costs, these are costs that are incurred to convert raw materials into finished products, and they include all those costs that are incurred in the production except the cost of raw materials. They are like supporting costs in the conversion of those raw materials into finished goods. They include direct wages, direct expenses, and other overheads for converting raw materials into finished goods. The other type we have discretionary and out-of-pocket costs. Discretionary fixed costs are costs which are set at a fixed amount for a specific period of time by the management in the budgeting process. These costs, they are always fixed. Most of the times they are always, we just take them as fixed costs. These are the costs we just put aside when we are doing, let's say we are making, when the management is making research. You may find that those costs, yes, they have set aside, but even we can even do without what? Without incurring those costs. Whereby like if you are to incur donations, if you are to donate or give gifts, even if you don't give those gifts, we are expected to be performing very nicely, but their role is to they contribute on how the raw materials is going to be, or the produced units, how are they going to be increased so that we can increase our sales. You can incur some costs like for research, how to improve the product, how to add value, and what should be reduced from whatever we had included depending on the customer's requirement. So those are the costs. Then you have the out-of-pocket costs. This is a portion of cost associated with the activity that involves cash payment to the third party or to the other party. This is actually money moving out of our bank accounts to pay certain expenses. So having known the different types of costs, so we are going to see how to prepare the cost statement. A cost statement or a cost sheet is a document which provides for the assembly of the estimated detailed elements of cost in respect of the cost unit or cost centers. This is a document that provides how costs are assembled or are classified or are grouped depending on the items of those costs that are connected to the output we have produced. All these are the components which were added up to produce the output we are seeing. It is a summary of cost of manufacturing a product. So it summarizes the cost of manufacturing a particular product. It gives us whatever has been incurred in the production of those outputs. Meaning we are going to be dealing with the production or the product costs. Then the periodic cost will come later. But when you are doing a cost sheet, we all looking forward to get those costs which are combined and are responsible for the production of the items we are seeing. These costs are summarized in 4 ways. The first one, we have the prime costs, and prime cost includes the direct material, direct labor, plus the direct expenses. That's the prime cost. It is having that direct component. We have the material, we have the labor, we have the direct expenses. The other category we have the factory or the indirect costs. And these factory costs, we have the prime cost plus whatever we have incurred in the factory, which are the factory overheads. Then the third one is the cost of production. To get the cost of production, it is the factory costs plus the office administration overheads. So you can even proceed to the fourth one to determine the total cost or the cost of sales, which is the production cost plus the selling and distribution overheads, plus others like the research and development, financial charges, and other costs. So let's look at the importance of a cost statement. Why do we need to prepare a cost statement? This cost statement, first of all, it presents the total cost on the basis of the logical classification. We classify the costs, we sum them up to get the total costs we've incurred either in the production or the whole total costs we've spent in both the production and the non-production activities to get the total costs. Because to get the total cost, you add the cost of production plus these other non-production costs. The first one we said, it presents the total cost on the basis of a logical classification. The secondary, we can be able to assist in fixing the selling price. Having got the cost of production, we can now put a profit component to the cost by using a markup or using any margin so that we can determine the selling price of the goods which we've produced. The third one we can talk about, it is used for effective cost control and comparison. When we add up the costs, we can know that in this scenario, we have spent a lot of money on, let's say, buying materials and paying workers which are directly involved in the production. So we can try to compare with what we incurred last time, and we see how we can reduce on the costs. The other importance of a cost statement is for preparation of cost estimates to tenders and quotations. Of course, when you know the costs you've incurred, you can it will be very easy for you to determine the price of the commodities that you are supposed to sell the output. If, let's say, you are doing a cost statement, a job cost statement, you will be able to determine the worth of the job you are doing, having known the costs which are going to be incurred in the production of the goods depending on the customer's specification. So you will be able to put the rightful amount on the quotation, on different quotations of the client. The last one, it is used in determination of the cost per unit and the total costs at different stages of production. You can even know before the output comes out that as per the raw materials I've incurred, as per the first process, I've incurred this and this amount, depending on the number of costs you've incurred as per that department. So by the time the output gets out, you know that I'm on top of whatever we've incurred. If we deduct, if let's say the losses we've incurred, because the normal losses, they are always there, if we remove them, you'll be knowing how much is the costs the products you've produced. So allow me give you the format of a cost statement or a cost sheet. For the cost sheet, we start with the direct costs. And we say these direct costs, those are the direct material, direct labor, and direct expenses. And those ones, they give us a prime cost. So when we reach at the prime cost, we add the indirect manufacturing cost or the factory costs to reach at the production costs. So we can start. The first one, we start with the material. When you are producing the output, you have to start with the material. When you want to produce certain items, you first buy the material. After buying the material, of course, you incur the labor. After incurring the labor, you may also incur some expenses like a hire of machines that can help you to lift the, let's say, the raw materials, which contribute to the direct expenses. So we start with the direct material. When you are dealing with the direct material, have the we may be having the opening stock, which was the closing stock of last month. It becomes the opening stock of this period. So it will be the opening stock plus the purchases, but these purchases are for raw materials. Then we can add, because when you are purchasing goods, there are sometimes you incur transport costs. That can be in terms of carriage inwards. You add it back to the cost of the purchases so that you get the total costs incurred. You may be having some returns. Let's say you've bought some goods, some raw materials, and you find that part of the raw material is not, or you've bought more than, or they have supplied more than you had ordered, or some of the goods are damaged depending on the quality someone wanted. You can be having some returns of raw materials, then you less it off from there, and you also less the closing stock of raw materials to get the cost of raw materials consumed. When you get the cost of raw materials consumed, then from there, having known the cost of the raw materials, we can now add these other conversion costs so that we can convert those raw materials into finished goods. Among these conversion costs, you have the direct labor, direct expenses, and this time the direct expenses, we say the royalties. Royalties is a direct expense, so we add them up to get the prime cost. Prime cost, we add the indirect materials or factory or work costs, and these costs, they include those costs which are incurred within the factory, but they are not directly traceable to the output, but they are incurred in the production department. So when we add them back, you will be getting the production cost. When you get the production cost, then we may be having some work in progress, opening work in progress, and closing work in progress. When you have those opening work in progress, you add back the opening on the production cost, you add back the opening work in progress, and you less the closing work in progress to get the cost, the production cost of goods completed. When you get the production cost of goods completed, then from there, if we are told that we need to prepare an income statement, we can go ahead and stop there. We take that cost to the income statement. We take the production cost of goods completed. But if you are not told to do so, then we can add back these other office and administrative expenses. Those are the expenses that are incurred within Those are the costs that are incurred within. Those are the costs that are incurred within the administration department or the supporting department. So from there, we can add the other selling and distribution expenses. Of course, those are the expenses we are incurring when we are selling the output we have produced. When you add them all, you will be getting the total costs or the total cost of sales, and that will be because our main emphasis, or when you are making this cost statement, you want to look at the total cost, and after getting the total cost, then we have to stop there, and that's all. The next video will be I'll pick a practical question and we solve it so that you can try to get more of what really how we prepare this cost statement. I'll get for your question, then we work it out. Thank you for watching. Please subscribe so that you can be able to learn more on this channel, and you can share to others so that they can also have a benefit and we try to learn together. Thank you. Until we meet again.